right, well, congratulations, everybody, on surviving Mardi Gras 2026. Welcome in, everybody. So good to see y'all. We actually missed everybody in February, but thanks to Mike Fernandez, he allowed us to host the Westbank over in St. Bernard Parish. So when you get a chance, you can catch that episode on YouTube and go out and check out the St. Bernard Parish Meetup. Another special thanks, Homebuyer Louisiana. So if you're looking for wholesale deals, make sure you check out Homebuyer Louisiana. And after you buy those deals, if you're looking for tenants, make sure you reach out to LeaseCo. Very excited about tonight's guest tonight. We want to take this opportunity to almost have a masterclass on how to survive multiple markets, how to survive disaster, how to be steadfast, stay in the game, and see it all the way through. So I want everybody to put your hands together for our guest tonight, Stephanie. Now, you're a familiar face. You've been around already in leadership with Noria, so we want to hear your story tonight. So how did you even get started in real estate?
I got started in real estate in like 1998. I hadn't graduated from college. I was about to graduate from college, and I was getting a degree in finance. And all my life I had been saying I was going to be an attorney. And it's because of the way I kind of was programmed by my good friend's mom. She's like, you're going to be an attorney. So that was my thoughts for myself. Got accepted into law school. It was a conditional acceptance where I had to do a summer program. And during that time, everything in my life shifted because I got in that program and it was cheap. It was $75 at Loyola for that summer program. And it was the best $75 that I ever spent because halfway through the program, I was like, this is not who I am. This is not me. And so I had real estate in my gut, but I couldn't tell you where it came from because nobody in my family was doing it. And so I just was like, real estate. So my last semester of Loyola, I just was asking, are there any real estate classes I can take? And there was one. The professor, it was a very dry commercial-like class, didn't really touch me. And so I went to the library. At that time, you checked out books, and, you had to, if you wanted a copy of it, you had to make it on their copy machines. I don't know if y'all remember that. But that, I had been in college for 4 years, couldn't finish reading a book. I'm not wired like that unless I'm really into something. And that particular real estate book that I got from the library, I read it like in 1 or 2 days. And then I made copies of it, and I kept reading it over and over again. And it just was something that was inside of me. So from there, I graduated, had student loans. And then I took, Russ Whitney came to New Orleans. I don't know if any of you guys know Russ Whitney, but he came to New Orleans for a seminar, and I signed up for one of his classes. And that's how I got started. In that, I joined Noria at the end of 1999, somewhere up in there. It might have been 98. But I joined Noria, which is the New Orleans Real Estate Investment Association. And I was just amongst a bunch of investors who basically surrounded me and showed me, the ropes. And that's how I got started. So I started with wholesaling.
Okay.
Picture that.
Yeah. And was it called that in 1999, or was it called something different?
It was called wholesaling. They were using the language assignments. Russ Whitney was teaching some of that. So I had gone out to his classes, and that was in combination with going to Noria's meetings monthly. And so the first 7 deals I did, I think it was 7, it might have been a little bit more, was one person that I met at Noria. She didn't have time. She owned restaurants. She didn't have time to buy property. So I would go out, and I had that one person who was just buying properties from me. And so that's how I got started.
Wow.
Yeah.
Tell us the story about that first deal.
So the first deal didn't deal because I got too nervous. It was a property on North Roman around St. Aug. And literally, I was on the phone with some of the guys from Noria. I had a mentor named Hal Rourke who would like walk me through the deal, because when you're doing your first deal, you read stuff, you hear things, but the reality is you're gonna need to pick up the phone and call somebody. And so I would call him, and he was like, Stephanie, all you're gonna lose is $500 if this doesn't happen. So he was like, do you wanna proceed? And I had to make a decision at that point in time. Something about the house, I had enough of intuition to know that that house didn't work for me. So I was like, let me just lose this 500 and try again with something that's more comfortable for me. So that property, I think, was in 70117 was the zip code. So then I started driving 70119, that zip code, and that was so familiar to me. It felt normal. It felt like, okay, I can do this. And so that's where I started providing properties for her. St. Anne, it's Treme, that Treme area.
Okay.
St. Anne, and the very first one that I provided to her, I think, was on North Galvez or either North Miro.
Okay.
It was a corner property. It was two doubles, and then, it was two doubles, so it was 4 units.
So what did you learn about that first deal that actually didn't close? You think it was analysis paralysis, fear? What
I
was
think
the
it was
takeaway?
I think it was a combination of things. I think the number one thing that I think it was that property didn't match me. It wasn't, and when I say it didn't match me, I didn't feel like I knew enough to overcome all of the obstacles that it could have presented. It needed a lot of work. Even though I was wholesaling it, I didn't feel knowledgeable enough about wholesaling it. The other properties were more of what they call now my buy box. So I felt more comfortable presenting that to someone than something that I didn't really know too much or feel comfortable about myself.
Okay.
Yeah, I didn't want to sell her something I wouldn't necessarily buy.
Right. So the one that actually made it to the closing table, what was that story?
So that one, that's funny. That deal, we looked at it. I remember that was the first time we knocked on the door, and somebody came to the door naked. It was a guy, literally naked. I'm not kidding. And we did the deal. The details are a little fuzzy because I can't remember if I made 3,000 or 7,000, because that was the numbers I was working with her. And I feel like that first deal was right at 3,000 in terms of wholesaling.
Okay.
So yeah, I mean, it went kind of cool. I don't know if you guys know this guy named Carson too, who was with Noria, but he was a realtor in that mid-city area.
Okay.
And so he was also a realtor that was guiding me at the time. I didn't have my license at the time. Yeah.
Okay. So how much of the negotiation they stayed naked? For you to make 3,000 or 5,000, I mean.
Y'all laughed. I'm sorry. How much negotiations? What?
Was he naked during the whole negotiation?
Oh, no. He just.
Okay. He just answered the door naked.
He came to the door naked.
Okay.
Yes.
All right.
And it was in the middle of the day, and he grabbed his robe, and we were able to walk the property, but it was something. And my client, she just went through it because she had her mind set on what she wanted. But yeah.
Okay. Awesome. So that's deal number 2. So wholesaling really got you into the game of investing. So how long before you take the next step into
buying?
Yes.
So I had to look that up. I looked that up on the way here, y'all. So my first purchase was in 2002.
Okay.
I was 25 at the time. I had been in a 6 or 7 year relationship. I had been wanted to buy, but I thought me and him was gonna get married. And so I was trying to hold out. And so I just got tired of waiting, and I eventually purchased the property in that same 70119 zip code. And so it was a double. My first buy was a double. I bought it for $55,000, somewhere up in there. And I ended up putting another 50 into it and ended up renting it out.
Okay.
Yeah.
Both sides?
Both sides. I intended to live on one side, but then my sister, who's in the audience, was going through a divorce.
Okay.
And so she ended up landing on that side. And so she stayed there for a short period of time. She built her a house, and then I just continued to rent the house out until right before Katrina. It flooded. But I sold it, I think in June. Katrina hit in August.
Okay, so you sold it before the flood. It flooded before the flood. What
Yes.
was that story?
No, it didn't flood before the flood. It flooded during Katrina.
Okay, gotcha.
Yeah.
Okay.
But I saw that and I was like, gosh, I just had, gotten rid of it, and I was happy because I had other properties by that time, and I was not mature enough to manage what I had. I knew, you hear these things, you wanting to accomplish these things because someone's telling you do this, and also because you want to do it. But there is a certain level of maturity you need dealing with real estate. And so when the storm hit and everything flooded, I didn't want to deal with all of that. I didn't want all of that responsibility of rebuilding. And so I just ended up selling properties. The ones that I had bought, I had set myself up really well with that first double because it had so much equity. So I'm in it for 106 by the time, I'm principal and interest 106. And literally, same block, I look over and there's a house for 230 something. And I'm like, oh, I got equity. And so from there, I pulled the money out and started buying other units. And so when Katrina hit, my next unit was wonderful because I bought that one for it had wonderful cash flow. It wasn't an equity property because now when I'm buying for equity and I'm buying for cash flow as well. But back then, I was just mainly kind of just buying for cash flow. And that property had like $700 a month, just that one unit in cash flow. And so back then, that was good money.
Yeah.
Yeah.
What do you remember about the pre-Katrina New Orleans market before it completely became what it is now? You drove for dollars, you were in the market. What do you remember about it?
The first thing that comes to mind is it was a lot cheaper. So things were a lot cheaper. I told you I bought that property for 50-something thousand. Right now, that property is 400-ish. And so things were a lot cheaper. And so a lot of times people, and I have been one of those people who have wanted to wait. Like, let me just wait and see what happens. And I've realized you can wait, but even if you wait, the prices are still, that's just the way of the things increase, and so they may come down a little bit. Right now they're softened a little bit, but at the end of the day, prices are still moving up. They're not really moving down. Yeah.
Gotcha. So 2002, you sold that duplex. Katrina hits. So walk us through the mindset now of this new investor. Hurricane Katrina happens. Now what's your thought process?
So Hurricane Katrina hits, and I like the word that you said, mindset, because that's something I really want to talk about tonight. I can talk about numbers, I can talk about properties, but the reality is dealing with real estate it deals so much with the mindset that you have to have, because there are so many things that could go right and could go wrong. And the things that could go wrong are very expensive, very risky in a sense. You're not buying bubble gum, you're buying assets. And so you have to be in a mindset to be able to handle that. And that's why I used the word maturity earlier. So I knew when Katrina hit, I wish I would not have sold those properties looking back, but the reality is that I did. So that in itself was a lesson. Because if you have assets and they're creating income and equity for you, why get rid of it? Unless there's something else you're going to do better with the money. I didn't do anything better with the money. I just took the money and spent it. And so you need to be doing something different, something better if you're going to make that transition. So after Katrina, I had become a realtor right before Katrina. And because I was in NOREA, and because my sphere of people were investors, everyone that I was talking to at NOREA was flipping properties, wholesaling properties, renting properties. Because I had a sphere of people around me who were straight investors, when I became a real estate agent, things took off immediately. My first year was Rookie of the Year because I just had a sphere there that I did not know I had. And so everybody was calling, hey, come write this contract, come do this, come do that. So my investments went on the back burner because I was helping other people, and I started to literally just build business from a realtor standpoint versus a investor. And so that was 2004 that I became a realtor. And then 2005, Katrina hit. And I was working with developers. So I left for Katrina early, which was unusual for me because my family always had to drag me away from for the storms. But something in me knew that Katrina was going to hit, and I think it was the name. And so I left like maybe a week early, hung out with a friend in Tennessee, didn't know Katrina was going to be what it was, came back, sold my properties, and immediately hit the ground running with real estate as a realtor because my developers had properties and people that they needed to get back into properties. And so they were calling, and I was writing contracts on stuff that I didn't even see, like just literally blind writing contracts. That's the first time I had experienced that. And so from there, I went from 2005, y'all listening, all the way to 2016 without buying a property, without flipping a property, without wholesaling a property, just straight real estate. I was exhausted. And I hadn't built anything. Yeah, I was making money, but you got to do another transaction and another transaction and another transaction. So I got tired. And so what happened was a light bulb went off like, you're not building anything. You're just looking for the next transaction. And so that's when my life really shifted. Now, before we get to 2016, 2009, I got married.
Okay.
February, I got married. 2009, I started my own brokerage. So I had started out with Ladder and Bloom. Then I went over to RE/MAX. RE/MAX approved me for a franchise. So I went through this whole process of getting approved for a franchise, but something again in me would not let me pull the trigger. And so I had a mentor at the time, and he's like, Stephanie, don't burn the bridge. Just leave the door open in case you decide to go back and do the franchise. So I decided not to do the franchise, and I opened my own company, 2009, and then that was in June, and then in December I was separated. And so I think when people talk about real estate, they talk about houses and properties and land, but behind all of that is people. And so you have to be able to see the person and understand where that person is at that time. So I had built a wonderful company. My company name was Blueprint. And I look back, y'all, and I can't tell you, I can't say this enough. I was ahead of the curve, and I did not know it. I was pioneering, and I wasn't aware. Sometimes you're moving through things and you feel like you're stuck or you're not getting anywhere, and then when you look back, you're like, oh, wait, that was it. That was actually it. I just didn't realize that was it. And so in 2009, I'm hiring virtual assistants. I have a virtual office. I have agents in the office. I'm doing all of the things that are ahead of the scale, but I don't really I feel alone in doing it, if I'm being honest, but I didn't really realize what I was doing until I looked back and said, goodness, you were doing that. And so then in 2009, at the end of the year, I get separated, and I'm a newlywed, so I haven't even made a year in marriage, so that traumatized me, okay? So I had to continue, though, and so I continue on, and we're separated for maybe about 9 or 10 months, and I'm still working real estate brokerage. I have not been investing. I'm just trying to hold on, and at that time, I have to sue a client. I'm working with a developer. We have a 6-figure contract, and they're completely breaching the contract. And so, my assistant who worked in the office with me at the time, she was like, Stephanie, everything in this office is together. You're going to have to sue these people. You can't let them get away with this. But who wants to sue their client? And then at the same time, I'm separated, like emotionally a mess. So I decided to go talk to an attorney. So I talked to the attorney, and he was like, listen, they're funneling money, they're doing blah, blah, blah. And he said, if you want, we can go after them. He said, start by sending them a letter. Sent them a letter, And they obliged. They wanted to settle with me, did not want to go to court, so they paid me. But because, again, maturity, I was not mature enough, or I didn't know my value or my worth at the time. I took the easier deal. I should have taken all of what they owed me, looking back, because it was a clear breach, and I basically had them bottom. So I could have got all of the money, but that was a lesson in itself. So I carry on. Me and the ex-spouse get back together, and, you know, life as usual, ups and downs. One thing I want to say is that if you are an investor, if you are whatever you are in life, when your personal life is not in order, it affects everything. And so my personal life was not in order. People were looking at me, they were admiring me. I was doing great things business-wise, but inside, I was completely broken. Okay, I want to be clear. And I'm saying this because people just thought they were going to come here tonight and hear about real estate, but it's really the thing that's beneath the real estate that affects the real estate. So literally, the marriage was very volatile, back and forth, a lot of separations. So of course, I can perform, but I can't go as high as I want to go because I got all this stuff happening in the background, okay, that I can't talk to the world about. And so literally 2016, we were in a good year. This was a good year, okay, we're still married. And so Armando Montiaglo, I don't know if you guys know him, he had a TV show. We took one of his classes, and I'm gonna tell you, people know and say things about him, and I agree with some of what they say about him because he's got some hustle in him, and he has high prices for what he charges. But those classes changed my life. Because
and that was A&E flipped his house.
Yes.
Armando. Okay. All
yes,
right.
that was that Armando.
Okay.
So I took a series of classes with him, and that's how I got back into real estate, which
Okay.
brought me back into flipping. So in 2016, I did a couple of flips, and they were like, my first flip was very good. I mean, it was close to 100,000 on the first one, and then the next one was close to 100, and so it was good money. And so during that time, he had taught a system that worked for me. And so I figured out what I like, what type of property feels comfortable for me. Just because you're doing real estate doesn't mean you have to do it in a way that others are doing it. You need to find your vein. Like right now, I'm not flipping, I'm buying rentals right now. So I found my vein in rentals. You have to find what aligns with you, because if you don't, then it's gonna be work anyway. But if you're not finding what aligns with you, what feels natural for you, then it's gonna be a headache. I'm just gonna put it to you real. You gotta figure out what it is that works for you. And so for me, my buy box for flips at the time was smaller properties, under 2,000 square feet. Something that I could turn around in 30 to 60 days, meaning I could buy it and in 60 days it's back on the market. And so I had gotten a system from him, and that system was so good that I would buy a property, and then 4 months, I'd buy it today, and then 4 months later, I'd be sitting at the table with the person who was buying it from me. And so
And what year is this?
This is 2016.
Okay.
Starts in 2016. And so, so I just kept doing flips, and that worked. But again, in the background of my life, there was things happening that were not helping me to go forward. They were kind of pulling me down. So by 2018, I just got depressed. I was just tired, and so I was still doing the investment side, but the real estate side, I just completely was like, I'm not working. You know, I had savings, I had things stored, and I just was like, I can't do it. And so there was a property, it was a historic property in Old Gretna, in the area that we're in. It was in McDonaldville, and it was the biggest flip that I ever did. It was over 2,500 square feet. But it wasn't square footage more than it was a historic house, understanding how to manage that. I knew nothing about that, so I give my lender numbers of close to 100,000 to fix it. Not even close. Not even close. So in that process, that probably was a big lesson for me, because that particular project took 18 months, and at the time I was using private money, and I had done several deals with him already, and we had a very good working relationship, thank God. But this is right before, so now I'm divorced, so this is right before I go through my divorce, before I go through the last separation that divorces us. And so literally, I couldn't even get out of the bed, y'all. But this particular project was going on, and what I knew was that someone who I had done so much business with, my private lender, I could not lose his money. And honestly, if I could tell you that was my motivation, that was my motivation. Don't lose his money.
Yeah.
And so I didn't care what came, hell, I didn't care what else I lost. I couldn't lose that because he had entrusted that with me, and I just did not want to sever that relationship. And so he didn't know all of what was going on in the background, but he was like, Stephanie, you're past 12 months, because, you know, with private lending, you usually get about 12 months, you know, depending on who your lender is. And so literally, I'm past 12 months, and I need about 65,000 more.
Oh, wow.
65. I put 100, and it wasn't even quite 100, it's like 90 something. And now I need 65,000 more. And I have to tell him I'm past 12 months, and and this is not normal for him. He hasn't seen, you know, I had one other deal before him that I might have needed like 3,000 or 4,000. It wasn't anything big. And so he comes out and looks at the property, because we were at the point where he wasn't looking at properties with me no more.
Yeah.
I was just sending him numbers, and he was just writing checks. And so literally, he comes out, he looks at the property, and I'm almost there, and I had to bring myself together to put this face on. You know how we have to wear a face. To put my face on to let him know it's gonna be all right. But inside, I was just completely shattered. So, but I knew the house was gonna sell, because I know numbers. I do know numbers, and I knew the house was gonna sell. And so I completed the project. I did not miss a payment with him. I wasn't late with the payment with him. And I want to express that that's very important in this business. When you decide that you're going to work with people, that, especially people that give you money, you need to make sure that you are paying them on time, and that they don't have to run behind you for their money, okay? So even though I needed extra money, he knew that I had never been late with him. And so he gives me the money, and I continue to pay him, and then I put the house on the market. And I put the house on the market 2 o'clock in the morning. And it's sold by noon. I'm not kidding. It was sold by noon. And so it was the biggest check I ever made. It was the hardest deal I had ever done. And the deal was so hard because I was having all of that going on in my personal life. But I also had a nightmare with the contractors on this particular project, because they did historic properties. I chose them because they did historic properties, but I had never worked with them. They were friends of my ex, and I knew them, but they just wasn't efficient. They would do one thing, and at the end of the day, they would end up having to redo that because they messed something else. They wasn't doing stuff in order, so it was costing more money, and that was driving me crazy. But I got through all of that. And so after I got through that project, that was the end of the marriage. And so then from there, I had to rebuild on my own. Now, I was just flipping, so I didn't own anything, okay? And so literally, I had owned some things that I had sold, like we had bought some land, and I'd sold my condo and things like that, but I didn't own any investment property. And so it freed me. When I got divorced, it freed me because I had gone through all of the emotional strain while I was in the marriage. So then when I literally disconnected, it freed me up to be me. And so I was able to have like a free canvas of what is it that you want, What is it that you desire? So I started back with flipping. Started back with flipping.
Yeah. So I like that you use the word risk management, and I agree with you. What real estate is all relationships, and what's the story behind the property? You always got to dig and find out what that is, right? So, what did you recognize or learn from those Katrina properties? As far as you sold them, but had you kept them, how were you going to protect yourself from risk and loss? Or what did you see the other investors go through that you were servicing? Were they going wrong with getting the wrong type of insurance coverage? Because I know Katrina was something totally nobody had ever seen, but the ones that did it right, what did you see them do correctly as far as managing risk and owning property?
They were well insured,
Okay.
which I was also, and they held on. They rebuilt. I chose not to rebuild. Looking back, I wouldn't have rebuilt everything because I had a little less than 10 units at the time, or 10 doors at the time. I wouldn't have rebuilt everything, but I would have rebuilt some of it. The ones, definitely the first one I bought, that's I still pass the house and I still have properties that I passed and I'm like, why did you sell it? I had one right there in Irish Channel by Bulldog. Like, why did you sell that? Like, but again, it's important who you have in your life, but it's also very important what you align yourself with. Your business or your real estate needs to align with your values and not what someone's teaching or telling you to do, but what works for you and for your life. It can't just be, oh, I could do this, and I can make this money. Yeah, you can, but if it doesn't align, it's probably not going to last anyway. And so that's a key thing that I don't think is said enough, the alignments.
Got it. So since you had that realtor hat on for so long, how did that impact or enhance you as an investor with having that run with just transaction after transaction?
After transaction.
Yeah, well, how did that impact you as an investor once you did jump back in?
Real estate helped me with investing from a standpoint of watching the markets more, seeing more of different markets, because you can kind of just horn on one market, but when you have clients that are kind of Jefferson Parish, Orleans Parish, you got to kind of have an overall of what's happening. So real estate helped me from that point. Honestly, Armando Montiago's class, as it related to comping properties, that was the best knowledge I ever gained.
What was different? What did he teach different?
He taught you how to hone. So before we had this MLS where you could, circle around a property and have a 1 mile radius, he taught us how to do that on Google. So he had a master class where we went to his class. He told us how to comp, and then once you comp, how to get your realtor, is what he told you. Get your realtor to run the numbers for the last 30 days or the last 90 days, and then place those properties onto the Google map. Well, now all of that is caught up to what he was teaching. But watching those 30, 60, 90 days showed me where to throw my fish line out. Because when you're buying property, especially if you are flipping property, you want to buy where people are buying. You don't want to buy because you like this property and it looks good, or you like this neighborhood, but ain't nobody over here. The fish ain't biting over here. You want to put your fish line where the fish is biting. So you need to be watching 30, 60, 90 days. That's one of the secrets that he taught me. So when I started flipping properties, and I told you from the beginning, I literally would buy it, and then by month 4, I was out of it onto another property. That was because I was watching days on market. That is key. If a property is sitting on the market for 160 days and that's that area, I don't want to buy over there because I don't want to hold it that long. So that was one of the secrets that he taught us. Another secret that he taught us was being systematic. So with the flips, we had an ABC list. I called my list ABC list. So I had ABC for all chrome fixtures. I had ABC for all bronze fixtures. I had lists so that when the contractor went to Lowe's or wherever he was purchasing, and it takes you a day or two to go into these different places and put these lists together, but he didn't need to call me. He didn't need to say, Stephanie, they don't have this light fixture, what you want? If A's not there, A's gonna match B. If B's not there, B's gonna match C, and they're all gonna match in a house. So it made my process quicker to not have to be constantly picking. Now, I will say that there were special touches that I gave to properties. You know, there's still two things that I do to this day, which is I put a wreath on the door and I give a welcome mat, because it's just a warmness that I want that buyer to feel. And every time I sit at a closing, I have not had one buyer who hadn't said, can I have that? And I'm like, it was already a part of my plan. But you can put a certain touch on a property so that it's not cookie cutter, but at the same time, you still need to be moving in a way that the majority of what you do is handled already, and you don't have to reinvent the wheel.
Yeah. Tell us more about what you mean by systems. I know some of us ride around with a checklist on the back of an envelope in our cars, or we have notes in our iPhones, but what do you mean by systems in terms of flipping that you got from that class? How do you describe what a system is in one of your flips?
When I say system, and that's a very good question, you know, I had a system of Google Drive acquisition. So that folder for me was green, and everything that I was acquiring, everything that dealt with the acquisition of that property went into that folder. And so then, and I still live by this system for my rentals, but acquisition, and then construction, that was my yellow folder when I'm flipping, okay?
All right. And
so literally everything that goes into that folder deals with construction and the cost that I'm spending. My spreadsheet is showing me this is what I intend to spend, and then I'm putting in the numbers, this is what I've actually spent. So that's the construction system.
Okay. And
that folder's closed when I have a buyer. So when the buyer brings me a contract, now I have a red folder that's closed. So that is all being, because it's moving, y'all. You out there with contractors, you getting paperwork, you know, it's a lot of moving parts. So you have to have something in place that gives you the ability to drop stuff and keep moving and still be looking at new things, if that makes sense.
Yeah. What about the acquisition process is different now than it was in 2016? So these were all MLS, or were wholesalers bringing you properties? What was your approach now and then?
My acquisition, I would say, is pretty much the same. I do a mixture. I buy off the MLS. I buy wholesale. I bought so many properties by writing a letter. You know, literally a letter, this size paper. You know, a handwritten letter. Hey, you know, I want to live in this neighborhood. I want to buy in this neighborhood. I don't know. I haven't done that in a while. The last time I did that, if I had to say, was probably 2021, somewhere up in there. But I've bought 5 or 6 properties in this neighborhood like that, literally, because the demographic of the people that I were buying from responded to handwritten letters. I've tried that in other places, and it did not work. So it really depends on the mixture of people and what they respond to. And sometimes I didn't do it long enough, but I did it within maybe 2, maybe 3 years, and picked up some properties from doing it. So there was a point where it stopped, and that kind of slowed me down from doing it. But whatever you choose to do to reach out, just continue to do it, and you can pick up properties that way.
Yep. So that's acquisitions, and walk us a little bit further down your chain of events for a flip. So once it's acquired, contractors.
Okay, so another thing that happened, and I'm just gonna say it, I gotta give credit where credit was due. Armando, he taught me how to walk in a property. This is the biggest thing I got from him. The biggest thing I got from him was how to deal with construction people, which are mostly men, So they see me, they think I'm a woman. a lot of times, and they don't understand what I understand. And so I go underneath the radar, but he taught us how to walk in a property. I'm not kidding when I say this. Walk from right to left around the property, and in 5 minutes, estimate it. That was the biggest gift I got from his program, because we were in his program. He was like, how much is a kitchen? How much is a bathroom? How much is sheetrock? How much is, and we would recite it every day like we was in military. And that's how it got engraved into my brain. So then when the contractor comes and he's telling me the price, I already know the price. I already know the price. I can't say that as confidently today because the prices are so changing with things that's happening. But literally, like, I'm the chick that gets on the roof. I want to see it. I need to be able to understand it. It's not just about seeing it. I need to understand when you say certain language to me, I need to understand what you're talking about. And so literally, he taught me how to estimate a property. So construction, now I know the price. Give me your numbers. I'm going to write up the scope of work, because the scope of work, he taught us how to write up the scope of work. It's going to be from room to room. How many light fixtures we got going, how many outlets, all of this stuff. It's not, oh, hey, I want this, I want that. When you are flipping a property, you need to be as detailed as possible. Because if you think you want this and the contractor heard you, but he heard it differently, and you don't have it in writing, now you got a problem when you come back and you see it and it's not done the way that you thought it would be done. So you got to be very clear on that. So I remember when I left Armando's program, it was a 16-page contract he had. Then I took a Robin Thompson deal, and she had like an 8-page contract, and somehow was able to condense it all down to about 6 pages. But when I first started showing that Armando contract, and I was going to different contractors, they didn't want to deal with me. And I understood it. I understand it now, because that can be really off-putting. But the reality is, that contract, I read it, and I wanted to protect myself. He made me put things in the contract that if you're not done by this day, is $50, $75, $100, whatever you want to charge. That makes contractors keep moving. Just different clauses. So I didn't go to law school, but I still have a little attorney in me, just a little bit. And so that was the construction side of things. And so go through that process, when they're going to get paid. It's all written in the contract, the drawers, all of that. It's not up for when you think, and another thing, I don't pay in advance. Like, it doesn't cost you, he taught me this, it doesn't cost you anything to take a hammer and hit the wall and demo it. That is labor. That's not a cost in terms of you going do something. So nobody really goes to work on Monday and get paid on Nobody goes to work on Monday and gets paid on Monday. Most people get paid on a Friday. So in my dealing with contractors, I'm going to pay them, and then they're not going to have to wait for money, because I do believe when somebody comes and they do a job that you need to pay them. They don't need to be sitting around waiting for you to pay them. And so literally, I was fine. Come demo for a couple of days, and I'll give you some money. You might not have to wait a whole week. We can talk about that. All of that is negotiable. But I'm just not going to give you $6,000 up front just because you want it. So has someone ran away with my money before? No. I have had that contractor on Burmaster, the house that I was telling you about, that literally wasted money, and I could see the waste. But that's the worst that I've honestly had.
Yeah.
Yeah.
And what about asset protection during the flip? So some people just get the construction insurance. Is there any additional insurances that you do? What does risk management look like on the flip?
So for me, it's just builder's risk, making sure I have liability. It's that simple. The builder's risk is cheaper. If someone's living in the property, like right now I'm buying doubles, so sometimes I got to work on the property and then the other side maybe rent it already. Okay. That's how I'm buying right now. Literally, in that situation, you got to get a policy. You can't get builder's risk because someone's actually in the property living in it. But for the vacant properties that I was, flipping, I was just about doing builder's risk.
Okay.
Yeah.
Got it. And financing, what does that look like?
Financing for me has been private over the last couple of years. Yeah. I think this year I'm going to transition back into commercial loans and things like that. But honestly, it's been private money. It's been good. It's expensive sometimes, but it doesn't bother me at all, because if you are purchasing the property properly, then I don't really care what they make, because I'm looking at my bottom line, and if he's getting paid in the process or she's getting paid in the process, we all making money.
Yeah. In addition to days on market, what's some of the other indicators that let you know I need to avoid this area when you do that 30, 60, 90-day comp? From your experience, what's been working?
So there are certain things that I avoid. The last 2 properties I bought, I kind of went against the rules. One of them, it doesn't matter, but the other one I'm a little concerned about, if I'm being honest. So some things to avoid is main streets. Especially if you're reselling. I'm holding on to these properties, so it's not as big as a deal, but like a main street, that can be off-putting to buyers. The floor plan of the property is huge. I can't say that enough. It needs to be functional. It can't be weird, and if it is weird, you either fix it or you just don't buy it. What else? Sometimes yard space is a big deal. You got to know. So you have to, in a sense, study who you have to study who your buyer is before you buy the property if you're flipping it, because you're not keeping it. So I always tell people, and this has been true throughout my real estate career, is the buyer mirrors the seller. I'm going to say that again. The buyer mirrors the seller a lot of times if you pay attention. So the person, you're the in-between person because you're flipping it. But, like, I'll give you an example. One of the last flips I did, it was a military guy I bought it from. He was deceased, but he was military. His daughter sold it to me. The buyer was military. And I knew he was going to be military, and I knew it was going to be a man. And so my mom was like, how do you know that? Because so when I buy, again, I'm studying who the buyer is. Are they FHA, conventional, cash? I'm looking at all of that. Do they need closing costs? All that's in the MLS. So I'm looking at the specs on that buyer to understand who's coming to me. So this particular property, the last property I flipped, was in an area that I had never flipped in. And it was outside of my box, but the numbers was so sweet that I was like, give it a shot. So I did. And the reason I didn't want to give it a shot was because the buyer who comes to that property is going to probably have to do some type of soft second or something that's going to take a long time and could fall apart, okay? And that's exactly what happened 3 times before I got to the 4th person. So I was talking to my mom about it, and she was like, how do you know this guy's going to be the one? And I was like, because first of all, the other 3 were females. This is a male, he's military, and what did I tell you from the beginning? He's probably gonna mirror the person who lived in the house before. So when I first learned that, I learned it in Gretna, in this subdivision. I had a property that I had a buyer on. No, I had the listing, and the listing was 2 females that they weren't married, but they were partners. And they had a beautiful house. I had them neutralize the house. Sometimes you have to neutralize the house if you got too much going on. So no one knew who they were. The people that bought the house were 2 females that were partners. And that's when it first hit me, like, ooh, it's like looking in a mirror. So if you can remember that, what attracted that seller to that house is probably going to be what attracts that buyer to the house. It's just, it's a little nugget that will help you sell the house possibly.
Got you. I like that you went a little bit further. So in that MLS, that 30, 60, 90 day, you go down to the bottom and look at the financing terms.
Oh, yeah. I look at all that.
Okay.
So when I'm looking for a flip, I am looking at let me tell you the Armando way. I am looking as close in as possible. Okay. I'm not looking a mile. I don't start at a mile. I'm starting at a quarter, and I'm going I'm getting as tight as I can. Now, don't judge me, But when I'm refinancing a property, I can manipulate this because I can use the mile, okay? But when I'm buying, I am, first of all, using private money. So I am thinking of worst case scenario because I'm not losing my lender's money. That's not gonna happen. So I'm not gonna over, I'm not gonna over quote what, thank you, I'm not gonna over quote what the house could sell for. If the range is between 200 and 230, I'm gonna look at the 200. I know I could get the 230, but I'm realistically, because I need worst case scenario, and if I get the 230, which most of the time I will, that's lagniappe. But the real number that I am presenting to my lender is worst case number because I can't risk that money, okay? So then on the construction side, the opposite side of that, I am escalating the number because I want worst case scenario. So it's just the opposite. So if I can save money in my construction, I will, but I don't want to have to go back and ask for another $65,000. So that is how that works.
Okay.
Yes. The 30, 60, 90 days. So I'm looking to see what happened in the last 30 days. I'm looking to see what happened in the last 60 days, but the last 90 days is where I'm gathering my number from comps because I'm not going to have it for 6 months. So, I just bought it. This is something he taught us. You just bought the property. You pull comps from 6 months, and if your comps are 6 months old or 5 months old, by the time you're reselling it, that comp is not as really, you could go back a year, but if there's things within the 6 months, then the appraiser's gonna try to use the 6 months before they go out a year to get the real number. So the closer in, the better. So when I'm pulling comps, I'm really looking at 90 days. I'm not looking at 60 days, because 60 days, or I'm saying 6 months, not 60 days. I'm looking at 90 days. I'm not looking at 6 months because 6 months doesn't exist by the time I'm done with that property. Does that make sense? Do y'all understand what I'm saying there? Yeah, because it may not be valid. It's only valid if the appraiser can't find something else to value. But if there's activity, then they're gonna pull the most recent activity.
Yeah, got it. What are some of the things that you do as the realtor and the investor to get these deals to the closing table to kind of make sure you're within that 4 months? So as a realtor, you can only do what the seller or the developer is willing to do. There's some concessions that you don't mind giving, some tricks that you've uncovered to get these deals, especially like the soft second transactions where the buyer may be qualified, but the process makes it long to get to the closing table. What are some things that you're willing to do from your experience to get these deals to the closing table?
When I'm doing a deal, whether I'm a realtor or whether I'm an investor, I'm dealing with the hard stuff first. I want the biggest problems first, put them on the table, don't hide them. Whether you're my client or whether you're the seller, you're selling me a property, tell me what it is. Trust me enough to be able to solve it. Because if it comes up on the back end, it creates delays. So I just fired a buyer, because she was hiding things. And I could sense that she was hiding things, and I knew that it was gonna cost me on the back end. So I'd rather not deal with you for 4 or 5 months and you tie up all my time. Like, she was blowing my phone up. She called me like 22 times, I'm not kidding, but between 8 and 2:30. And I had to come to Jesus talk with her, and she still didn't get it. And I was like, you know what, I'm not gonna be able to help you, because you're the very person who has that anxiety on them. You're gonna push it off on me, and then you're not gonna do nothing. So I'm not interested. And so literally, I was telling her, because she was trying to skirt her income with the bank, and I said, do you understand you're doing a loan? They're gonna pull your pay stubs every 2 weeks. You're not skirting that. You're not gonna be able to, because she was getting soft second money, so she didn't wanna be over the income that is required. So she was thinking she was gonna get around it. You're not gonna get around it. And I know you're not gonna get around it, so I'm out.
Yeah.
I mean, that's how, So that's the things that I do to mitigate the pain. You know, I tell them, is there something you're trying to do? You know, tell me, trust me enough to not, you know, try to harm you in some sense, but to help you to get it solved. I've had people who've had tax issues, divorces, marriages, all of that happening, and I'm like, okay, this is the strategy. You got to talk to me, but you also got to talk to the lender, because I'm going to negotiate this for you, because that's what I do. But the lender is going to actually carry the process through to make it all come together. So you have to be able to trust both of us to tell exactly what's going on. And with the sellers, I say the same thing. You know, if they're selling me a property, is there anything I need to know that's going to be on his property?
Title-wise.
Title-wise, exactly, yeah. And sometimes they tell you, sometimes they know, and they, you know, hope you're not going to find out. But, I mean, you do.
Yeah. And what about pushing a buyer? So if you have a flip, you're not in complete control because you have the buyer's agent on the other side. What are some things that you either have had to do to get them to the closing table, or what's kind of your toolbox that deals normally fall apart, but you pretty much prepared and could push it all the way through? So
something that comes to mind for me as an investor and as a realtor, this is an indicator, okay? And it's a strong indicator for me. If I am selling a property to a buyer, whether that buyer has a realtor or not, their deposit is non-refundable after their inspection period. I will give them an inspection period, which is fair. But after that, if they lose their job, if they whatever, the deposit is no longer theirs. And I usually want a decent deposit. I'm not looking for $500, okay? So when that shakes somebody on the front end, they probably don't think they could do the deal. So I'm not interested. So that's one of the things that I use to manage deals falling apart. The flip that I told you that I had 4 people on, and the 4th person purchased it, that is the only flip I had like that. All of the other flips was first person who looked at it, bought it.
So those 3 were non-refundable deposits, or that's something you hadn't applied yet? The 3 people that didn't close?
The 3 people that didn't close, I think I used it on the 3rd one, but the first 2 I didn't, being nice, because it was soft second money. And again, it was outside of what I usually do. You know, I usually don't buy in that area because those deals can fall apart. And so I was just being considerate because they're first-time buyers. But the first-time buyers that I would look for on my main flips are stronger buyers in a sense that they usually are doing a conventional loan, so their credit is higher. They have some form of savings or some form of retirement that they can pull from, and it's just a different buyer.
Talk to us about what you were thinking about during the time when you were on the sidelines. So I think you said 2002 or 2022 when you jumped back?
I jumped back in 2016.
Okay.
And then 2018, I kind of set down from real estate.
Okay.
I was going through during that time, and I remember someone who's in the audience, a good friend of mine, I was leasing his place. Literally, I was married. We were leasing his place. We had bought some land, and we realized it wasn't going to work out. And I was on the couch depressed in the middle of that flip on Burmaster, okay? And I had so many things going wrong. And at the end of the day, I still was able to get through it all. So it taught me that even if it feels like it's not going to work, you just need to keep going to get to a point where you can get through it and make a decision from there. It's a key thing. So yeah, that was that. So then 2020, I'm separated. I'm flipping now with a partner because I kind of put my foot out there. I didn't want to just boom, go straight in. So that went well. She was a part of NAREA. She comes to these meetings as well. That went really well. We did 2 flips together, and then from there, we just kind of started doing our own flips again. And then I started buying rentals. So rentals I've been buying. That's what I'm doing now. I do want to do some flips this year. I probably will do 1, maybe 2 flips this year and continue to buy rentals. But the rentals have been good. I haven't had any evictions.
Good for you. One more question on thoughts while you're on the sidelines. And the reason why I'm asking, so 2022 and 21 was kind of super peak, and then people got hit with a bunch of different stuff, and they're on the sidelines right now. So what were the thoughts going through your head, and what kind of pushed you? Because you see all this activity around you, or people see all this activity, and you can have so many different thoughts going through your head. What were some of the thoughts going through yours while you on the sideline?
Okay, so I was on the sidelines. Let me just clarify. I was on the sidelines 2018, getting through that monster of Burmaster. 520 Burmaster, if y'all want to look it up. Yeah. Getting through that monster, okay? And so then in 2020, I sold it. And that's also the year that I separated. And then I got back into flipping like maybe less than a year later, okay? But COVID hit. And so, again, I told you when everybody was inside, so that was good from me because I didn't have to be out with this face going as I was going through a divorce. And so it worked out perfectly. So I missed real estate agent, rookie of the year, missed all of that COVID money. All of it. I mean, things were flying off and I was chilling because I had then flipped Burmaster and I wanted an emotional come down from it all. So I was working, but I wasn't really working. And so it was a good time for me, if I can say that. It was a very good time for me because y'all, I just made 50 last month, okay? This is where
birthday.
Yes, thank you. This is where you find yourself. When you in the middle of shit, can I say that?
Yeah, it's just a church.
When you in the middle of shit, this is where you find yourself. So 2021, when COVID and everybody's kind of going crazy, I find myself. What do I mean? I find that I love parks. I love to walk in the park. COVID made me get out, and my business at coffee and dinner now is in the park because of COVID. So I learned that I love the park. It can't just be all real estate, y'all. I gotta say that. I learned that I like to run. I started running at 47, just different things that I learned about myself that made me realize all that money I was making, it can't just be all about money. Y'all heard me? It can't be all about money. I am happier now with less income. I have more assets, but I was making a shitload of money. I'm gonna be honest with y'all. I am happier now with the peace and the simplicity of my life than all of the being everywhere, doing everything, trying to hit this number, it's not that I'm not a metrics number, but a metrics person. I'm not an ego person. I'm more of a now being more aligned with purpose, what fulfills me. And real estate is just a way that I can get it done. So even with my rentals, I'm not just buying property to get rent or to have equity. I'm not doing it that way. I am doing it in a way that fulfills me. I am providing housing to people that need it and that never had a house like this before, but it's not a big mansion, but it's a safe space for them.
Yeah, talk to us about your position with rentals. So you have a bulletproof system on flips. So now, what do you credit your 0% eviction rate to? I want to hear that.
Character.
How you measure that?
I am married. I am putting tenants in based upon character. Now, you have to be careful in doing it that way. There's always something in the credit or the background or the income that you can use, but I'm on character, if I'm being honest with you. And that's because I'm not married. I don't have a man that comes with me to every property. And so I got to go sometimes by myself. So first of all, it needs to be somewhere that I'm comfortable to pull up at night.
The property.
The property. The second piece of that is the person, when I look at them and discern them, I can't be afraid of them. I just can't. I can't feel uncomfortable. I can't feel all of this. Ugh. And then all the other stuff on paper needs to match. But if I'm uncomfortable, that doesn't work for me. So I'm a as you may be able to tell, I'm a pretty reasonable person, I think. But I do not play with tenants. As a realtor, I get these agents telling me, oh, the tenant, and I'm thinking, what? You can't get in because of what? Who house is it? So that type of thing, I have 3 things that I tell tenants. If you pay your rent on time, you will not have a problem with me. Do not destroy the house. You see how you're getting it? And if something is broken, don't just sit there and watch it be broken. Mitigate it, call me, have a conversation with me. If you do those 3 things, we gonna be good. If you don't, I'm gonna have to come around. And I know you're not. When I was a tenant, I didn't want my landlord around. So I tell them this. I have a conversation. I don't just give them a lease. Yeah, they might just sign it. But when we walking through that joker, I'm looking them eye to eye, letting them know nicely, we're gonna be real good, but don't play with me. Because I'm doing this as a service, and it all works. If you do what you're supposed to do, I'm gonna do what I'm supposed to do.
Yeah.
Yeah. So the 0, and that is real estate in general, across the 20-something years I've been in. 1 eviction on a $3,000 condo in a warehouse district. Other than that, it's been good.
Yeah. So if days on market is an indicator for you whether to avoid or move into a flip, what's one metric or one indicator that measures character on a screening report for you when you get an applicant apply to your property?
It's hard to put it into words, to be honest with you. It could be, so if their credit messed up, let's just talk about credit. If their credit messed up, which people have messed up credit, that might not necessarily mean they're a bad person. You know, if they're having a conversation with you and they're telling you their credit messed up before you look at it, they're probably preparing you and wanting to put it out there. So that I respect. Depending on what the story is will determine whether or not it's smoke, like they're blowing smoke, or whether or not it's really something that happened.
So transparency is one indicator to you.
Transparency.
Okay.
Yeah. Another indicator is how they present themselves. They don't have to come all dressed up or anything, but if they slouching, and I'm not interested, because that's how the house gonna be. It's real talk.
Yep.
It's just how the house gonna be. So those are things that matter. If they can't make it on time and they call or they don't call, indicator. Is though there are indicators that you get before they fill out an application. You can't just be putting people in property, because if you're just putting people in property, then you're just putting people out of property. You're going down and evicting them. So you have to, my tenants for Christmas, I gave them all gifts. I went and bought a $1 coffee mug. I put cocoa in it, peppermints, and I wrote them a handwritten note. I talked to ChatGPT, and I told ChatGPT about each tenant. They gave me 3 or 4 sentences. I wrote it on a handwritten note, and I gave it to them because they all pay me on time, okay? And I there's a strong appreciation for that. When they move in, I give them a little welcome gift, welcome to the property. So I'm setting an atmosphere of, I want you here, I want you to stay here, don't misbehave.
Tell us about the management software. So you all self-manage, or a portion is under property management?
So I manage right now, and I'm
So
probably
all
at the point,
self-managed?
all self-managed. They don't
Okay.
run me crazy, because again, I'm picking people that, like the second to last property I bought, the guy was there, it was his brother's property. I haven't even gone up on his rent because this cat paid me 2 weeks in advance. Like, what I'm going up on rent for? I'm like, can you catch the yard? That's gonna cost me $150 a month. So his rent is still probably $100 less, but honestly, I'm not interested in losing him because he is consistent.
Yeah.
Yeah.
That makes sense.
Yeah.
So management software, what
Oh.
are you using?
What's that? So honestly, my tenants, some of them get assistance, and so they Zelle me. And so some of my tenants are older. and the Zelle don't work. Like the last 2 months, one of the units, the Zelle wasn't working, and so they literally give me their bank account number, and I'm like, text me, let me know it's okay for me to Zelle this to myself. You got to send me a text. You got to send me something in writing that I got paper proof, because I just can't imagine being on the phone. But these are the type of tenants I have, that I'm on the phone and they're like, Miss Stephanie, I can't get the money. I don't know how this thing works. Can you just Zelle it to yourself? I don't know why I didn't go through, because you can set Zelle up on automatic payments. Software, I want to move to software. I'm not sure what I'm going to use yet. I've been fumbling around with Turbo Tenant and Rent Check. Rent Check is something I used last week or 2 weeks ago. Dynamic. The tenant goes in and they do their own inspection and send you pictures and write up what they see, and you ain't got to do all that walkthrough. Yeah. So I love that. So I'm looking at different platforms. I am looking into property management. Okay. I want to get to I probably could do a good 20 units.
Before you hand it off?
Before I do that, because right now I'm a little over 10. It's not even necessary right now.
Yeah. So what does the team look like to help you keep all that together? So you in the middle. So what does maintenance look like? What does the team look like? So the team is, and that changes. Before I wanted help, I wanted people on paper. Now it's back to character. If I'm being honest, it's back to character and it's back to alignment. The license does matter, but the license is not first on the list. I got to be honest with you, because they got a lot of licensed assholes. So I'm looking for, when you say team, my God, so much hits me with just that word, because I'm at a point where I understand it. I think before I just had people just filling in the slots because that's what the gurus tell you to do. But it's very important that you pick people that you align with, that you can grow with, that can sharpen you. I just switched over to Keller Williams. I was a broker for 16 years. I told you I had my own company. I started my own company in 2009. I just moved over to a whole brokerage where I'm paying them some money. I can't get all my check now. Literally because of alignment. It's important who you align with. Yeah. Yeah. So one team member, and we're about to wrap up, but I just want to, for the self-managers in the room, what does your setup look like? So leasing, you're doing leasing on your own. You don't need evictions because you're doing the leasing the right way. But maintenance calls, is that one contractor? How do you set that up? I have multiple, yeah. Okay. So I have handymen, I have contractors. So it just depends. I have plumbers, electricians, sheetrock people. Not just one go-to. Okay. But at the time, in certain pockets, sometimes it can be just one go-to that kind of you leaning on heavily. Like for a minute was Mr. Carl. Well, Mr. Carl ain't Mr. Carlin right now. So right now it's Jerry and it's Sam. Those are the people that I'm leaning in, because Mr. Carl is in a pocket of whatever's going on in his world. It's not that we won't reconnect. Same thing with Josh. That's another person that I use a lot. We will reconnect, but right now, Jerry and Sam getting it for me. Right. Got it. We'll take that. Questions from the audience? All right. 2. Yep.
If you could go back to your 25-year-old self and give yourself 3 concrete pieces of advice,
ooh,
what would you tell them? What have you learned in your 25 years since then?
So I'm going to repeat that so that everyone can hear what you said. I would tell my 25-year-old self as an investor, the 3 things I would say is, the first thing I would say is trust yourself as best as you know how to at that time. Trust yourself, because nobody's going to look out for you like you're going to look out for you. So you've got to trust that you have, and when I say trust yourself, I mean you got to trust this, not this, this. You can gain knowledge here, but there's something that's God-given that's here that speaks to you. You better trust that thing, because that thing don't lie. Okay, that's the first thing. The second thing is get educated. Wayne Leone, he's a State Farm agent. I don't know if he's still around. He was around for a while. And my corporate life was with State Farm, just so you guys know. I was a claims adjuster who fought Morris Bart all day. So that's how I learned how to negotiate, okay? So Wayne Leone had this portfolio, I would go and look at his books. He had these books of stuff in the French Quarter. I'm like, how'd you get all this property? And he said, before you start, get educated. And I was offended. If I'm being honest. But that was the best advice he could have gave me, because when you stepping into real estate, it's a different animal. It's not like going buy a piece of jewelry or something that's cheaper. Not that you can't buy expensive jewelry, but you could lose a shirt off your back if you're doing it without being educated. You got to take an educated risk with real estate. Third thing, so get educated is number 2. The third thing is have fun. What do I mean? It just can't all be numbers. You gotta like crunch the numbers, do the numbers, be educated, understand it, but then you gotta go have fun. Otherwise, what are you doing it for? I'm an adrenaline junkie. I just tried to scuba dive at 50. Okay, last month. Not kidding. It didn't work out. I couldn't get down past 8 feet, but I gave it a shot. And so when I go, because I'm a traveler, when I go, that opens me up to creativity. So you need to be balancing whatever it is you're doing with real estate. Your real estate needs to be aligned. You taught me that. Let me tell y'all real quick. This cat, he's a teacher also. My nephew is in his class. And I'm, no disrespect, calling you cat.
Yeah, no,
but
sorry.
I went to the parent-teacher conference because my little sister couldn't go, so my nephew, I went with him. And you said something that I never got a chance to tell you that resonated with me. You said, oh, when they come to this business class, we're doing a profile on them to figure out where they fit and what aligns with them, basically. Mm-hmm. And then you said, next week, this is the part that got me. You said, next week, we're doing a spiritual test. Yes. Mm-hmm. So that their business aligns with their purpose. Mm-hmm. Straight from Emil.
Yeah, that's it. Next question. Steve, you had a question? Thank you for that. Thank you for that.
Say that again? Oh, about 2026. I was just telling David in the background. Things are different. Right now, I'm used to selling to investors, people who do commercial, people, first-time buyers. Right now, I'm doing a lot of rentals, like people who just leasing space. And I am doing a lot of investors who are buying low-priced properties and doing whatever with them. But my crystal ball for 2026, which is his question, even though I am not making the money that I'm used to making right now, it's going to be a great year. And I'm not just saying that. I'm not reciting that. I mean that because something in me has shifted. And that's all it takes. Mm. I don't care what the market doing. I'm going to do me. I'm going to make money in whatever market is happening.
Yeah. I think that's a good start, good part to end. So thank you for your time. Stephanie, you going to go to Gattuso's?
Yes, I'll be at Gattuso's.
Right. Any further questions, you can talk to her in the back, and Steve will come up for needs and wants. All right.
Thank you, guys.